Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mark-eitel.
All right. My name is Mark-eitel, and you are listening to the Mr. Mortgage Show. And you are in the right place if you've got questions regarding real estate. And who doesn't? I mean, man, another 75 basis point hike yesterday. What is that going to do to the housing market? What is that going to do to mortgage rates? Is this the straw that finally breaks the housing market's back? We're going to cover all of that. We're going to deep dive into your questions. We're going to go way past the headlines into the data and give you the real information, the information that you need to go out there and make better decisions regarding real estate and mortgage for you and your family. So super excited to be with you this week. We are always happy to be live on WPSL every Thursday. With me this week is the lovely Jennifer, my producer. Hey, Jen, how are you this week?
I'm great. It's been a fantastic week. How are you, Mark?
Hey, I am doing great too. I'm super excited about this show. I know there are a ton of questions regarding what's going on in the housing market, specifically tied back to the Federal Reserve move this week and then his comments afterwards. So I found that super interesting, right? Because going into the meeting, we saw a run up in interest rates. There was a significant upward pressure on interest rates starting late last week into the early trading days of this week, Monday, Tuesday, and then Wednesday morning. And we saw that significant upward pressure. So mortgage interest rates, a 30-year fixed rate, is back over 6%. That caught a lot of people off guard, but it was interesting because initially, right after the rate increase announcement, we saw a tiny, tiny bit of easing. The stock market responded really well in the morning going into the meeting, and during the press conference that followed the meeting was at 2, the market was doing rather well. You know, it was digesting the information, and then it slid. So it's going to be interesting to see where we go from here moving forward. The Federal Reserve was very adamant in his comments after the move that they are determined to quell inflation. And I don't care what anybody in the administration says as far as trying to spin doctor this. The Fed said in his own words, inflation is still out of control, and they're committed to bring inflation back down. And they've got a 2% target rate, and whether they can get us all the way back there or not is yet to be seen. However, the only tool left in their toolbox that is making any significant impact is raising rates. And the whole idea behind raising interest rates is to make it more expensive to buy things, so we slow demand down. And in slowing down demand, that is going to put pricing pressure on all categories in the market. And that's the idea behind raising rates, because you've heard me talk about it. And if you listen to the show, if you listen to the podcast, I encourage you to go back and check out there's an episode in the podcast library. Go to mrmortgageradio.com. That's mrmortgageradio.com, and search the title Bamboo TP. And I talked about supply and demand is the only equation that governs prices. That's the only thing. It doesn't matter if interest rates are 50%. If more people want to buy than want to sell, prices go up. And that's what we have in housing. Even now today, there is a lower number of property selling each month, right? Volume is down. However, there is also fewer properties coming to the market. So while inventory is increasing, it's still half of what it was in 2019, which was arguably our last normal economic environment, because post that time period, we went into COVID. And then all bets are off because the government just started pumping money into the economy, which disrupted the normal behavior. So my point in all of that is right now today, we still have more demand than supply, even with interest rates in the sixes. And historically, 6% money is very, very cheap money. But that's a whole nother topic. Makes me sound like an old man. I remember back when interest rates were double digits. I hate being that guy, so I'm not going to go that route. But my point is that right now, there is still more demand than supply, and that's what's supporting prices. So what the Fed is trying to do is pull demand down to meet supply so that the pricing stabilizes. And he's not just looking at housing, he's looking at everything, because all categories, with the exception of fuel, increased in the last reporting cycle. So I say all that only to share that the interest rate environment that we're in is slowing demand, but it hasn't slowed it to the point that it's putting pricing pressure on the supply. Now, all that being said, the sellers of properties have been more willing to reduce prices, contribute to buyers' closing costs. We talk about the rate buy down strategy a lot, using the seller's money to buy the rate down. We're seeing all of that every single day in the market. We're seeing, a more balanced approach to negotiating. So we are definitely transitioning. However, at the moment, we don't see the bottom coming out of this thing, and we won't. And I put a big exclamation point behind this. We won't see that happen until there's more supply than there is demand. And a byproduct of these increased interest rates, in my opinion, are going to slow supply, in the sense that fewer people are going to want to sell if they've got a 2.5% or 3 or 3.5% interest rate on their current property. They're sitting fat and happy. They have a ton of equity, a tiny interest rate, and yes, fellas, tiny is better when it comes to interest rates. Why would they want to sell? I talk to people every day who would like to move, but they couldn't sell their house and rebuy it today. Certainly not trading a 2 or 3% interest rate for a 6% interest rate, and not buying into this inflated environment as far as value. So that's another piece of the puzzle that nobody seems to be talking about. Where is the supply going to come from? Another traditional place that we look to for supply is the senior community. When the seniors are moving into assisted living or they're downsizing, that's typically bringing supply into the market. However, we have seen an unprecedented uptick in reverse mortgage activity by that very same senior community who doesn't want to move into assisted living. They're healthier than ever before. They're living longer than ever before, and they want to age in place. They want to stay in that home as long as possible. A lot of those fixed income seniors are getting pummeled by inflation, so they're tapping their equity in the form of a reverse mortgage and sitting tight. So that's another place where less supply than normal is currently coming into the market. So right now, today, as crazy as it sounds, the housing market is like that high heel shoe underneath the foot of the unusually large woman, right? We've all seen that lady walking through Walmart in her sundress with, a very meaty calf jammed into a high heel shoe that you think there's no way that shoe can hold up. And you watch every step, right? Here, I'm going to do some sound effects. I don't know if you can hear that. The sound. She's walking down the aisle, and you're waiting for that high heel to give up. But that high heel is holding up under all that pressure. Well, right now, housing is holding up under all of the pressure of increased interest rates, of the recession, of the uncertainty of the future. And ladies, don't throw tomatoes at my car. I'm going to peek out the window to make sure I don't have anybody slashing my tires. That was not a rub on big ladies. I have loved many big ladies in my life, and little ladies too. I don't discriminate. Oh, that didn't sound right. I didn't mean it that way. I love everybody. Big ladies, big guys. Well, that doesn't sound right either. I'm going to stop talking about that. But my point is, right now, housing appears to be holding up, and it has nothing to do with the cost of money. It has nothing to do with Fed policy. At the moment, it's still a supply and demand equation. And that episode titled Bamboo TP, in the library of previous shows that you can find at mrmortgageradio.com, speaks directly to that. I talked about how during the pandemic, we all were scrambling for whatever we could find, and I used the reference of toilet paper. And long story short, the only thing that we could find in my household was bamboo toilet paper, and we paid, a ridiculous amount of money for it, and we were happy to get it. But we did that only because there was no choice. There was no supply in the market. So we bought what we could, where we could, and we paid whatever we had to pay for it. So anyway, I share all that because supply and demand is what's controlling this market, and supply and demand is what controls every market. I don't care if you're buying popsicles, if you're buying shoes. Who has pulled over on the side of the road and overpaid for a bouquet of flowers on their way to Mother's Day or Valentine's Day because you forgot, right? Supply and demand. You overpaid because that was your only choice. So anyway, guys, you hear that music, you know what that means? We are going to roll into a break. That's my cue. We'll be back in two very short minutes. Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's mark-eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is mark-eitel, and you are listening to the Mr. Mortgage Show. And we are super excited to be with you today, live every Thursday here on WPSL. Thank you for joining us. I realized that I went completely through that preamble and never gave anybody the Anytime hotline. So if you have questions or comments, you want to participate in the show, hey guys, it's all about you. Without you, this doesn't happen. So we encourage your questions, and we have the Anytime hotline. I'm going to throw it over to Jen. Jen, give out the Anytime hotline. How do the folks get us?
Call or text anytime on the Anytime hotline. 855-462-7292. That's anytime.
That is the Anytime hotline. And as Jennifer said, you can use that anytime when we're not here on the air, broadcasting live over WPSL's airwaves via the Mr. Mortgage studio down in Martin County. That's our secret headquarters, if you will. But when we're here, it rings live. Jen will grab it here in the studio. But when we're not here, it pushes to my office. So you can always use that number, 855-462-7292. 855-462-7292. Or if you prefer not to call or text, just visit the website, which is mr.mortgage, never a .com. Just go up to the address bar and type in Mr., hit the little dot, type in mortgage, hit enter, and voila, we appear. And there's a contact us button on the top, and there you can type in your question, hit submit, and Jen will pull that off the computer and read your email. So super excited to get started. I think we're going to have a darn good show this week. So are you ready to get rolling, Jen? What do you say?
Let's get this party started.
Let's get the party started indeed. So with that being said, I am going to throw it over to Jen because I did see during the break that a question had come in. So, hey Jen, read that question for me, would you?
Anonymous sent this one. Is it possible to refinance if we have late payments? I'm afraid if we wait much longer, we will be in foreclosure.
Hey, Anonymous, possibly. Let me put it that way. I don't want to discourage you. There is a possibility. Now, when I say that, I need to know what you're late on. I'm assuming you mean late mortgage payments. With that being said, it's going to make it a little more challenging. I'm going to need to know, are you late right now? Were you just late and you've caught up? Because all of that plays a factor. The distance between your most recent late payment and trying to refi is going to help. And that timeline is super important to determine what options are available. But please don't put your head in the sand. If you think that there's troubled waters ahead, the sooner the better that you can consult somebody. And I would welcome the opportunity to be that guy for you. We can take a look at your mortgage payment history and any and all other late payments and see what a strategy might be that'll get you, out from underneath the burden of this circumstance. I'm super sorry to hear that you're going through this. The good news, if there's any good news around it, is that we're at a time in history, if you will, where most people have never had this much equity. So there is a chance that you have enough equity to absorb whatever you need to absorb as far as payoffs and, get yourself out from underneath this. But there are a lot of moving parts around this. But the good news is there's also a tremendous number of loan products. So we're working with a client right now, and due to some circumstances that he has no control over, he's in a situation where, he doesn't qualify for any type of normal conventional mortgage, but he also has, a tremendous amount of equity in this property. And with him, we need a two-step strategy. So he's got a pending situation that has a timeline on it, and the clock is ticking. He needs to pay this. Anyway, these creditors, if you will. That being said, he doesn't qualify for a mortgage. So what we've done is we've arranged a hard money or private investor, which is a non-institutional, think of, your rich uncle, more or less. There's a whole avenue to private money out there that a lot of people don't even know how to explore. But we were able to arrange a private money loan, and it's a high interest rate. There's no question about it. But it is interest only, and it gives him the time he needs to satisfy this debt and then put himself in a position to be mortgage ready. And we're working with him through this 24-month plan. The cool thing is on the other side of this, and he can make the payments. It's not as if he doesn't have the income. He's not able to document anything in a fashion that qualifies him. So anyway, long story short, we've got a 2-year plan in place where that private lender will allow 2 years before they want to be repaid. Let me rephrase that. It's a 2-year term before they want repayment in full. They want a payment every month. I don't want to mislead you that these people don't want to be paid. But my point is, this is going to work wonderfully for him because he's going to preserve around $400,000 in equity. And his alternative is to sell the house and go rent until he's mortgage ready. But he owns the house now. He's got $400,000 in equity, and him having an opportunity to buy back into that neighborhood is highly unlikely. So I share all that only to encourage you that there are a lot of creative strategies out there around accomplishing some goals that people may not on the surface consider or even have access to. So please give me a call off the air. I'd like to learn a little bit more. We'll be discreet, and first of all, let me say there's absolutely zero to be ashamed of. Since 1999, there's not a credit situation I haven't seen, and facing foreclosure or having lates speaks very, very little to your character, because I know from my experience in this business that bad things happen to good people. And if there's a way that we can help you through it, I would be honored to do so. But thank you so much for that question. Hey, Jen, do we have any other questions? Yeah. Okay, go ahead.
Ashley sent an email. We put solar panels on the house a couple years ago, and we're getting ready to sell. Can't the buyer just take over the solar panel payment?
Hey, that is a great that was Ashley? Okay, Ashley, so here's the thing. Yes, the buyer can take over the payment, assuming that the solar panel lender will allow them to, and oftentimes they will. The lender who financed the solar panels they'll have to sign a subordination agreement where they agree to go in second position behind the new loan, and the buyer is going to have to be underwritten by the solar panel finance company to make sure that they have the creditworthiness to do so. Now, here's the challenge, right? First of all, when a solar panel company approves the loan to buy the solar panels, part of that criteria that they're evaluating the loan on has to do with how much equity is in the property, because that second position is equity sensitive. They don't want to be up to 100% or over 100% combined loan to value. So you're going to want to make sure there's enough equity. And the reason I'm sharing that, if somebody's putting down, 3.5% and they're using an FHA loan, there might not be enough equity in that property for that solar panel company to want to subordinate behind a 96.5% loan to value first mortgage. So that's to be considered. The credit worthiness of the buyer from the standpoint of the debt to income ratio. So is there enough in that ratio to bring that solar panel payment into the equation and not push them over what we call a DTI or debt to income ratio? So just a quick explanation. The buyer, when they're underwritten, they take the gross income and a certain percentage of that is allowed to be applied to debt. Now, that percentage is going to include the mortgage payment, but in this case also the solar panel payment and anything else that they have on their credit report. So I say all that just to say that yes, it's possible, but there are a lot of moving parts around it that need to be considered. And we're seeing more and more of late where there's just not enough equity in the deal. But that being said, it's doable and it may work for you. So I certainly appreciate that question. It's a good one. We're getting a lot of solar panel questions lately. The solar panel salespeople have done one heck of a job. But anyway, thank you for that. I hope it helps. If you need more information, give us a shout on the Anytime hotline. I'll be happy to address that with you. But you hear that? You know what that means? That's my cue. We'll be back in 2. Sit tight for 2 minutes, and there'll be more of the show on the other side of this break. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallygreatagents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallygreatagents.com. www.reallygreatagents.com.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the REC loan he advertises. Long story short, we did a REC refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is mark-eitel, and you are listening to the Mr. Mortgage Show. And if you have questions, we are going to do our very, very best to get you the answers and the data that you need. So give us a shout, 855-462-7292. That's 855-462-7292. That is the Anytime hotline. Or visit the website, mr.mortgage, never a .com. Heck, you don't even have to type in all those W's. Just go up to your address bar and type in Mr., hit the dot, mortgage, hit enter, and boom, there we are. There's a Contact Us button on the top of the page. You can submit your questions there, too. And my producer, the lovely Jennifer, is womanning the Anytime hotline and the question line, or the email line, rather. She'll get your questions on the air, and we will do our best to get those answered for you. And during the break, I was peeking out the window because I made that comment about the women of Walmart and those high heel shoes. Well, I think I'm in for a treat when I leave here and try to drive back to the office, because there are a couple of good-sized women out there just leaning against the car, and they want to have a word with me. So, hey, if I show up missing tomorrow, please reference this show. And I'll try to do my best to get you some identifying characteristics about the ladies out there, so you can help uncover the mystery and have me found. But anyway, enough of that. I'm going to throw it over to Jen. I know that some questions are coming in, so let me toss it over to Jen for another question.
Terry sent a text. Can we use the money from selling some crypto as a down payment? It's not in my savings account yet.
Hey, Terry, that is a great question. And the way that Jen paused there on crypto, I wasn't quite sure what you were going to be selling. Yes, you can. And there are even loan programs that would allow you to use crypto as an asset necessary for the reserves and the asset requirement. In the past, right, a couple years ago, before crypto became such a thing, people were having to sell them or move them at very least into a stable coin before we could count them as assets. But now they're more liberal about that. I think crypto is becoming more and more of I don't want to say mainstream, because I know that flies in the face of crypto, but being recognized as a legitimate asset. But if you're going to use it for a down payment, then you're going to need to sell it and move those dollars into an account that you can then transfer to the title company. Long answer to a great question. Yes. You can use your crypto, sell your crypto, and move the cash into the account necessary to make the transfer to the title company. And I hope that helped. Hey, I'm going to throw it over to Jen and see what else we have over there.
Taylor sent a text. Do you lend on commercial properties too? I'm curious to know what type of terms are available for a strip mall.
Hey, Taylor, that is a great question. I'm so glad you brought that up, because we don't talk enough about commercial lending. Yes, I do originate commercial loans. I've done everything in my career from SBA acquisition and development finance all the way down to, as I mentioned, the private money bridge loans for properties. But it's interesting that you're asking about a strip mall, because we're in the middle of a transaction now, and we're able to do 80% loan to value with an interest rate. And it's yet to be determined, because it has to do with the credit worthiness of the buying group. It's a partnership, and the income being produced by the property. But the interest rate is going to be somewhere in the mid 5s to mid 6s, which I know if you're listening closely, your eyebrows just jumped up, because that's cheaper than residential mortgage money at the time. It's fixed for 5 years, and it is a 20 to 25 year amortization. And again, the term sheet hasn't been issued yet, because we've just started the transaction, but that's where we're projected to land with it. So there are a lot of really, really good loan products out there for commercial properties, anything from, warehouses to office buildings, anything with even multifamily more than 4 units falls into that would fall into a light commercial category or full-blown commercial. So thank you for that question, because I don't talk enough about it. The show, typically revolves around questions regarding residential real estate and residential mortgage. But we're seeing some interesting opportunities out there in the commercial space right now. And one thing to watch moving forward, it's interesting because, whether the current administration and the smart people up in Washington want to admit it or not, I think most people are aware that we've entered a recession, and we've been here for a little while. In a recessionary environment, depending on how much teeth this recession has, commercial retail, right? So usually like a strip center, that's what brought this to mind. Sometimes the lending will get more conservative around that because those properties can be more affected in a long-term recession. Right now, we're not seeing that. We have seen, well, let me rephrase that. We're not seeing that across the board. We've seen some lenders in all categories, residential and commercial, pull back a little bit in anticipation of what may or may not happen. However, we're still seeing some pretty aggressive opportunities out there to borrow money for commercial properties as well. So, Taylor, great question. I appreciate that. I always like to talk about commercial property, if you couldn't tell. But Jen is over there waving wildly at me, indicating that we have another question. So, hey, Jennifer, what do we have?
Nellie sent an email. I was listening to some of your prior shows online and heard you mention a loan for people who show little or no income but have substantial assets. Can you elaborate? Thanks. We really enjoy your show. Thank you.
Hey, Nellie. Yes, thank you for that. We appreciate it. And I'm glad that somebody is going to the website to research some of the I think there are 73 or 74 episodes up there right now. So there's some good stuff if you're done binging Cobra Kai and Better Call Saul and what's the other one? Oh gosh, that everybody, me included, Ozark. If you're done binging everything and you want to binge some podcast and back radio show episodes, check out MrMortgageRadio.com. You'll find a ton of stuff there. But Nellie, thank you for that. I appreciate the fact that you're listening, and thanks for your kind words. Now, on with the answer. Yes, so what most likely I was talking about is there are a couple of strategies around verifying income when there is no income, but there are substantial assets. One is called asset depletion. So let's say you have $1 million, and depending on your age and the loan to value of the property, let's say they take a term 10 years, right? They'll deplete those assets over a 10-year schedule and say, okay, in this case, Nellie could take $100,000 a year out of, and this is just basic math because they do calculate growth in there, so it would be more. But you could take $100,000 a year out of your portfolio as income, and that $100,000 a year would be used for the necessary income to qualify you for the loan. That's one way to do it. Another way that we see a lot of people utilize is, let's say you have enough to pay cash for the property. There's a loan product out there that if that's the case, right, you have enough to just pay for it, then you would qualify from the standpoint that no income is going to need to be documented because you could just pay for this with the stroke of a pen. So that's another strategy. It's called Able to Pay in Full, and there's an acronym for it. But Able to Pay and asset depletion are two strategies that we use for borrowers in your circumstance. And then lastly, the landlord loan, if you're thinking of buying commercial property or investment property rather, not commercial like I just spoke about, but a 1 to 4 unit property. The landlord loan doesn't look at income at all. It looks at the income from the property and the assets from the borrower. And assuming the property cash flows, then it's a fundable deal. So that may be one other loan product that I spoke about during that podcast episode. But hey, I really appreciate that question, and I'm tickled that you found the podcast library and found a show that interested you, episode rather. So MrMortgageRadio.com is where you find that if you are so inclined to dig deeper on the show. So anyway, thanks for that, Nellie. And you hear the music. You know what that means? Jen is giving me the cue. That's my cue. We'll be back into Sit Tight for 2 minutes. On the other side of this break, there will be more of the Mr. Mortgage Mayhem. Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallygreatagents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallygreatagents.com, www.reallygreatagents.com.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to mark-eitel and the Mr. Mortgage team.
Hey, it's mark-eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is mark-eitel, and you are listening to the Mr. Mortgage Show. And you heard the man, 855-462-7292. That's 855-462-7292. That is the Anytime hotline. And truly, anytime. If we're not here in the studio, that pushes to my office. So write that number down and use it anytime you have mortgage or real estate questions. 855-462-7292. Or check us out online at mr.mortgage, never a .com. Just type in mr.mortgage. Boom, there we are. Upper right-hand corner, you can submit your questions via the Contact Us link. So, that being said, I want to continue with your questions. They're always my favorite part of the show. Hey, Jen, do we have... Yep. Okay, perfect. What do we have?
Jamie is asking, what is the minimum credit score and minimum down payment for a FHA loan?
Oh, Jamie's crying. No, Jamie's not crying. Jamie is asking about FHA mortgages, and Jamie will be smiling when I answer that FHA mortgages can be written down to a 580 credit score, and in certain circumstances, even all the way down to a 500. However, the lowest score that we've recently been able to successfully close was a 560 or a 540. I'm going to have to do some research on that. But a 580 is the threshold where the program, it's available without any problems at a 580. The challenge sometimes is what is on the credit report that's pulling it down to a 580. There may be some credit challenges that need to be addressed. But I'm going to double back to that. So the minimum down payment for an FHA mortgage is 3.5%. The cool thing with FHA is that 3.5% can be gift funds from a family member, and the seller can pay your closing costs. So you really have a lot of wiggle room with an FHA loan to get in there. So I hope that answers your question. Back to the credit score thing for one moment. So most lenders, I believe, have this. I know we do, and we use it all the time. It's a score simulator. So when we review someone's credit, and we're in a circumstance with this right now, and again, sharing no personal information, but this is a fantastically cool couple. And because of circumstances that were out of their control, one of them has a 575 credit score. So what we've done is we've run them through the score simulator and come up with a strategy that is going to get their score over 620 and give them access to a ton of loan programs at 620. So what we can do is we're reviewing the credit, and with the assistance of the simulation software, we can get as granular as, okay, if you pay $300 towards your Visa balance, $275 towards your Discover balance, we can go through all of the outstanding trade lines on your credit report and make adjustments in the simulator, and it'll give us a pretty good idea of where your score will move to. And we've had a lot of success over the years by running that simulator, and I'm only offering that as a glimmer of hope, because even if your score is not where it needs to be today, you would be surprised how often and how easy, with a few little modifications, you can get there. We do it all the time, and we've got, kind of a motto. It's never no, sometimes it's not now, but we always give you the how. We'll always give you a strategy to get there. So I appreciate that question. I hope that answer helped. If it didn't and you need more info, give us a shout. But in the spirit of questions rolling right along, I'm going to throw it over to Jennifer for another one.
Here's a question from Connie. I have a small mortgage on my home, but I only receive Social Security income. Can I qualify for a reverse mortgage?
Hey, Connie, that is a great question. And if you've listened to the show, reverse mortgages are close to my heart, because a lot of people right now, the only opportunity they have to live comfortably is by tapping the equity in their home. And an equity line or a cash-out mortgage only adds more debt to your equation. But the cool thing about a reverse mortgage is it requires no monthly payments, never a monthly payment. Now, that being said, you still have to pay your taxes. You still have to pay your insurance, and if there's a homeowners association, but you never make a monthly mortgage payment. So because of that, you need to have enough income to manage the property. So the Social Security income is often enough. And this is not an uncommon scenario where you're left with just your Social Security, and it's not getting it done with the inflation that we're in the middle of, and if we go into a recession, it may be even more challenging. So I say if we go into, I personally believe we're already there. But anyway, that's another topic for another show. But I'm sharing all that just to encourage you, Connie, because the income side of the equation is often not a problem with the reverse mortgage. And even if it is, there is a strategy with the reverse mortgage and guidelines and exceptions that will allow us to use the proceeds from the reverse mortgage as income to help you qualify. So I encourage you to look into it if you have any interest in it, only because it sounds like you would be a good candidate for it. So if you have questions, give me a call, 855-462-7292. But I'm going to throw it over to Jen for another question. But thanks, Connie.
Claire sent a text. Is it possible to get a mortgage for a tiny home?
Hey, Claire, tiny home, tiny mortgage. Usually no, right? Let me say that again. There may be a loan out there for it, like you can go out and buy a camper or a fifth wheel or an RV. But as far as a mortgage product for it, because tiny homes are mobile, it's not attached to a property. And just like a manufactured home, for a quote-unquote mortgage to be originated for a purchase or a refinance of a manufactured home, it has to be with the land. You have to own the land also. So because of that, my gut instinct is no as far as a mortgage is concerned. Now, that being said, there is a cool neighborhood up in Melbourne that I saw advertised. Gosh, what is it called? I'll have to post it to the Facebook group because it's super cool. But they're building tiny homes on site. And because of that, it's just a little house. It's not, a tiny home like you see on the television show Tiny Home Nation, where they put it behind the truck and, off it goes. This is actually a concrete foundation. It's a site-built house, but it's just tiny. I think it's like 500 square feet. But it's super, super cool. I think it's called Minneapolis. I'll find it and post it to the Facebook page. It's super, super cool. Those are financeable because they're actually a house. The challenge with that would be appraising it and finding other like properties, but because this neighborhood is all these tiny stick-built houses, I don't think that's going to be a problem up there. But hey, great question, and I know that we are definitely seeing the tiny house trend continue. Family has some property that we all use recreationally, and we were talking at one time about putting some tiny houses out there just so we had a place to stay. And I just think they're cool. But at the moment, I don't know of a mortgage product for a tiny house. So I hope that helps. I appreciate the question. Hey, Jen, is there another question ready?
Antonio is asking, how long after bankruptcy until I can get a mortgage?
Antonio, that's a great question, my friend. So it depends on the type of bankruptcy and it depends on the type of mortgage. So it could be as much as 4 years or as little as 2 years. And if you get an FHA loan and you're in a Chapter 13 bankruptcy where you're making monthly payments, if you've made, 12 monthly payments in a row on time, you can qualify for a mortgage. So great question. I hope that helps. I always encourage you to get back on the horse as soon as possible because, if you filed bankruptcy and the sooner you can buy a house, the better because you're going to be building equity and rebuilding your credit. So fantastic question. I appreciate that, Antonio. All right, you hear the music. You know what that is? That's my cue to be back in 2. We'll be back in 2 short minutes for more of the show. Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Hey, it's mark-eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is mark-eitel, and you are tuned in to the Mr. Mortgage Show. And we do this every Thursday at 11 a.m. right here on WPSL. We're coming to you live from the Mr. Mortgage Studios down in Martin County. We're warming up the crowd for Clay and Buck. I love walking around town telling people that I am the Clay and Buck warm-up show on WPSL. My head gets so big I can barely put my cowboy hat on. But anyway, we always enjoy being with you. So thanks so much for your participation. And if you have questions, get them to us by calling 855-462-7292. That's 855-462-7292. Jennifer is womanning the Anytime hotline, and she'll get your questions on the air. Check us out online by visiting mr.mortgage, never a .com, just mr.mortgage, and you can submit your questions via the website too. Always enjoy your questions, and I'm going to throw it over to Jen and see if we can squeeze in a couple more. Hey, Jen, what do we have?
Mary sent this text. My mom has died and left her house to me and my 2 brothers. Is it possible for me to buy the house from my brothers? They are not interested in it.
Hey, that's a great question, and yes, it is. So it depends on if the deed is already transferred into one or all of your names. That's going to be a different strategy. If you're on the deed already with your brothers, it's going to be a refinance scenario where you're buying them out. If it's not yet in any of your names, then it's even an easier transaction because you're just buying it from the estate, and you can use your portion of the property as equity. So let's say there's 3 of you. If I understood the question correctly, then you would already have, a third in equity. So you could make the transaction work with no money out of pocket. So hope that helps. I'm sorry about your mom, but I'd be happy to help you get that property into your name should you wish that to be the case and buy your brothers out. But yeah, it's always helpful when only one of the party is interested in buying it, because that saves a lot of the argument and negotiations around trying to get it into one individual's name. I can't tell you how many times we've seen the bickering begin. So I wish you luck on that, and I'm happy to help you if you have any questions. We have had some really, really good questions today. You guys are bringing the heat and not disappointing, and that's no surprise. WPSL listeners always bring great questions, so we certainly appreciate you. We started off with a question today regarding trying to do a refinance with late payments. And, that can definitely be a challenge. If anybody is feeling the pressure of this economy and thinks that they might need to make a move, do it sooner rather than later, because once that water starts to reach, shoulder high and you're about to drown in debt, it's often too late because you're putting yourself in a tougher situation. And if you start missing payments, it becomes a challenge. So always sooner rather than later, at least to, sort out what's available to you. But that was a great question. Taylor, I think it was, asked about commercial. I don't talk enough about commercial on the air, but there's some really interesting, loan products around that now, and debt instruments, and how you can access liquidity from your portfolio. There's just a lot of neat strategies around all of that. And then Connie, I really appreciated Connie's question regarding a reverse mortgage, because a lot of people are thinking about it, but they're super confused by it. So I appreciate you, reaching out and having that question, because the more discussion we can have about that loan product in this environment, I think it's super important. Jamie, and I even sang to Jamie, but Jamie called about FHA loans and minimum down payments and minimum credit scores. So you guys have certainly brought some really solid questions this week, and I just want to thank you for that. And we're at the portion of the show where I'm going to ask you to do me a favor. I'm hoping I can count on you to share the show. If you find any of this information interesting, if it resonates, if you find value here, and you think somebody that would benefit from the show, if you've got friends or family or coworkers, or even the guy in front of you at Publix, and you hear him talking about real estate or mortgage, right? Is it a good time to buy? Is it a good time to sell? With these crazy interest rates, does any of this even make sense? Please introduce them to the show. We'd love to answer their questions. We're always trying to grow the audience. We're having a blast with you here, and we want to get as many people to the party as possible. I'm hoping I can count on you to share the show and help me spread the word. So if you need us during the week, you can call the Anytime Hotline, 855-462-7292. Or find us online at mr.mortgage. That's mr.mortgage, never a .com. And if you want to share the show, mrmortgageradio.com. Everything's there. All the back episodes of the podcast and all the back episodes of the radio show each week also. So, I'm going to throw it over to Jen for a goodbye.
Bye, Jen. See you next week.
See you next week indeed. Hey, we've had a blast with you this week. You hear the music. You know what that means? We've wrapped up another show. My God, I can't believe how fast it goes. We love joining you each Thursday right here on WPSL. And again, if you need us during the week, check out Mr.Mortgage online, mrmortgageradio.com. The Facebook page is The Mr. Mortgage Show on Facebook, or give us a shout, 855-462-7292. Have a fantastic week, everybody. We'll be back next week right here, same time, same station. Be good.
That's a wrap. Join mark-eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.